markets did show some signs of correction yesterday mid-session. We have seen some sell-off in US markets. This was predominantly on the back of the fact that some news reports came out that Japanese central bank is considering reversal in their easy money policy. Now, considering Japan has been following an easy money policy for the last 20 plus years, this was definitely a big news from a global investment point of view. One has to remember that the majority of the carry trades are in yen and settled in yen, and thus this was a big news for the investors. I think from a Japanese economy and Japanese central bank point of view, at some point of time, they need to slowly wean away from the easy money situation and start becoming a little more cautious. And probably initial steps towards that are being initiated, and that did make the global markets nervous. US yields have gone up to 4%, and this definitely is not a great news for equity markets or equity market investors or emerging markets like India. Thus, we did see some amount of nervousness as far as Indian markets are concerned when they opened for trade today, and a little bit of correction we did see. This probably is a combination of a bit of FII selling and some profit booking at higher levels. Having said that, I think there is still a lot of steam in Indian markets, and we continue to remain cautiously optimistic as far as Indian markets are concerned. There are some concerns on certain pockets regarding the corporate results, but by and large, results have been as per expectations. IT results in some cases were a bit of a disappointment, but otherwise things have been in line with what the market was estimating. Monsoon, on the other hand, after starting a bit late, did quite a good job. Now the question or this issue is, are we getting excess rains, and would the next sowing season be affected? Now, this is a major issue as far as Indian economy and Indian markets are concerned, and we have to monitor it very, very carefully, apart from the residual corporate results. But having said that, we continue to maintain our positive bias on Indian markets. We believe the correction which has happened to an extent from all-time high levels and may happen in future also to an extent, should be a great opportunity for long-term investors to pick up good quality stocks. We do like BFSI, and as we have been saying again and again, the opportunity here is multi-year. A stock like HDFC Bank post the merger definitely deserves a relook, and at current level, it definitely should be in an investor's portfolio from a long-term perspective. We also like some of the pharma stocks post the recovery we have seen in US generic prices, and also the continuously growing Indian market. So we like Cipla. Of course, the performance has been good, but beyond that, a lot of corporate restructuring talk is in the air, and some amount of that may be true. So Cipla may be an aggressive bet at current levels. Of course, the India-focused pharma companies like Mankind Pharma has been our all-time favorites. We also like construction infra cap goods company Larsen & Toubro. Fantastic set of results, dividend, buyback, all that has been announced, but we still believe that significant amount of runway is still left. So from a long-term investor's point of view, considering the tailwind, Larsen & Toubro is definitely a good buy. Investors should do well to look at opportunities for adding to their portfolio during the current correction. Thank you.